Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is still Shyam Kagodia. Now, before I start the discussion or continue the discussion, if there is no issue with the sound, can you give me a thumbs up? Done. Let's start then. Let's start. So we are discussing Basel guidelines. Basel 1 is over. Basel 2 is over. Now we are supposed to start with Basel 3, right? That is a concept of Basel 3 guidelines. Now, first and foremost, please understand, right? Basel 3 guideline is basically an extension of Basel 2. You see that Basel 1 has been implemented, extended a bit, more will be implemented under Basel 2. Now again, the Basel 2 has been used, right, as basically a tool, extended more. Again, we have Basel 3. Now, first and foremost, understand this carefully. The three types of risk which were used in Basel 2 have been continued under Basel 3. Can you see this? The three types of risk: credit risk, market risk, and operational risk. Right? So the same three types of risk are there. Just a second. Basel 3, not Basel 2, Basel 3. The same three types of risks, that is the credit, market, and operational, are still there under Basel 3 as well. They are there under Basel 3 as well. And because we have the same three types of risk, again the same three-pillar approach will also be there under Basel 3. I hope you understand my statement. Supervisory review, market discipline, capital adequacy ratio, they are there under Basel 2 as well as Basel 3. But apart from that, what new thing has been introduced? Right? What are the new parameters, new guidelines under Basel 3? Let's have a look at it. Under Basel 3, capital adequacy ratio of 9%. Second, Tier 1 capital must be at least 7% of risk-weighted assets. Is it okay? If the Tier 1 capital is higher, the bank will have capital which can absorb the losses much more easily. Is the logic okay? Let me know. Sir, if the capital adequacy ratio is 9%, why are we targeting 7% of Tier 1 capital? The reason is very simple. Tier 1 capital, I hope remember before the break also we have discussed this. Tier 1 can absorb the losses much more easily compared to Tier 2. Everybody agrees? Let me know. Let me know you're present. Let me know you're listening to me. Tier 1 can absorb the losses much more easily compared to Tier 2. That's the reason we want more and more Tier 1 capital which are supposed to be held by the bank. Apart from this, we are also supposed to hold a capital conservation buffer now. Right? The banks are supposed to hold capital conservation buffer. Now, what do you mean by capital conservation buffer? Let me explain it. Buffer means something that is held separately. I'll repeat it. What do you mean by the term buffer? Something that is kept separate, extra, that is called as a buffer. Now understand this carefully. The banks are already holding capital adequacy ratio of 9%. Now that 9% capital will be sufficient for banks to absorb the losses during normal years. Right? During the normal years, whatever losses are incurred, that 9% will be sufficient. But what if, understand this, what if there is an emergency in the market? What if there is a crisis in the banking sector? What if the losses incurred by the banks go beyond 9% capital? Don't you think in that context you should be having some extra capital to absorb the losses? Is it okay? Don't you think you should also have certain extra capital to absorb the losses? And that concept is called as capital conservation buffer. Buffer simply means something that is kept extra, something that is maintained extra, more than what is actually needed. So idea is simple here. Banks should build these capital, or banks should keep this extra capital so that during emergency situations, during the times of stress in the banking sector, the bank will have certain extra capital if there are more losses incurred by the bank. right? That extra capital that is maintained is called as capital conservation buffer. And how much we are supposed to maintain? 2.5% of risk weighted assets. We are supposed to maintain 2.5% of risk weighted assets. Now, here is an important point. I have written a capital adequacy ratio of 9%. I have also written capital conservation buffer of 11.5%. I will write one more statement. Let me know, is it correct or wrong? The total capital requirement under Basel III, they will write it as 11.5%. Correct or wrong? I'll repeat the statement. The total capital requirement under the Basel III, they will say it is 11.5%. Correct? Incorrect? Right? Some of you will simply say, sir, may be correct, may not be correct. Don't ask me. I'll sit in the corner nicely like this and I'll go. It's correct, by the way. 9% plus 2.5%. Simple. Right? 9% plus 2.5%. So if they say total capital requirement under Basel III is 11.5%, again the statement is correct, by the way. Okay. Next, liquidity coverage ratio. LCR, liquidity coverage ratio. Now, what is this idea of a liquidity coverage ratio? Let me give you a very simple understanding of this. Imagine you are operating a bank. Now, is there a situation wherein continuously the money will be withdrawn from the bank? Right? Is there a possibility? I hope you understand. Right? If you're operating a bank, you have a bank, generally what is the process? People will keep deposits, people will withdraw money. Generally that is a process. But what if there is a time period where rather than collecting more deposits, there are more and more outflows of money? Right? People will start continuously withdrawing the money from the bank. Can you tell the customers not to withdraw money? Is it possible? Right? Imagine tomorrow you go to a bank, you want to withdraw money, right? You want to withdraw money from your bank account. Right? Can the manager say, sorry, I will not allow you to withdraw money. I will not allow you to take out the money. Can they do that? No, they can't do that, by the way, until unless RBI tells them. So the argument is, what if the money that is flowing out of the bank is increasing? Don't you think the bank will arrive at a point wherein they will simply run out of cash? Is it okay? Right? The bank will arrive at a point wherein they will simply run out of cash. They will not have any money to allow you to withdraw the funds. So what under Basel III, there is a guideline. What does this particular guideline say? There is a term called as LCR, liquidity coverage ratio. LCR, liquidity coverage ratio. What does this liquidity coverage ratio say? The banks must estimate on an average how much funds will be flowing out of the bank for the next 30 days. I'll repeat the statement. The banks must estimate how much funds will flow out of the bank for the next 30 days. Right? And that amount they will have to maintain in the form of high quality liquid assets. That much amount the bank has to maintain in the form of high quality liquid assets, HQLA. Now, before I explain to you any problem with the term high quality liquid asset, let me know. Any problem with the term high quality liquid asset, which simply means which can be converted into money very, very quickly. Simple logic. Right? Which can be converted into money very, very quickly. For example, government securities. Can't you convert government securities into money very quickly? Answer is yes, by the way. Now, question is, why should they maintain? And how will they come to know? Simple. First, why should they maintain? In order to ensure that they will have sufficient amount of money whenever the funds are flowing out of the bank, so that they will not run out of the money. Second, some of you are asking, on what basis will they find out? My dear, you tell me. If the month is November, December, do you expect the money to flow into the bank, or you think the money will flow out of the bank? Don't you think if it is October, November, December, etc., usually a lot of money will flow out of the banking sector? Right? Now, some of you are asking how? Right? Why? Festival season. Simple. Festival season. And don't say, sir, what if the festival changes month? Right? Diwali will come in the year end only. Year end in a sense, let's say third quarter. Diwali will never come in the month of April, by the way. Right? Christmas will come in the year end. Christmas will not come in 1st of April because it's a new financial year. Right? So the argument is simple. You know what season is there. Generally, how much money will come to the bank, how much money will flow out of the bank, etc., etc. So estimates are made based on that itself. Right? So that is liquidity coverage ratio. So this is Basel III guidelines. Okay, Basel III guidelines. So 1 is there, we have implemented it. 2 is there, we have implemented it. 3 is there, we are in the process of implementing Basel III here. So any doubts? Let me know. Any doubts so far regarding, let's say, concept of banking? Right? Any issue with the idea of, let's say, Basel? Again, it's very complicated. I know that. Do me a favor. If any of your friends, right, or let's say your parents or your siblings are working in a bank, ask them what is Basel. They will not know what is Basel. But ask them what is the lending rate, deposit rate, etc. They will know that. For a very simple reason, these are very, very technical, right? These are implemented at a higher level in the management, not at the lowest level. Okay? Why we implement 1 rather than 3? My dear, these were announced over a period of time. All the 3 are not announced at once. 1988, 2004, 2010. You tell me, your question is, why are we implementing 3? Right? Or why do we don't just implement 1? Why not 3? As and when they are announced, we are in the process of implementing it. Okay? Let's start. Next concept, non-performing assets, NPA. Non-performing assets, NPA. Now, what is this idea of, again, some of you are asking, sir, what about this under Basel III? What about this? As far as I am concerned, this is more than sufficient. For UPSC, this is more than sufficient. Much more than what is actually sufficient. Come to this now. Concept of non-performing assets. Now, what is this idea for non-performing asset? A loan is given to a customer. If the loan is repaid, then we'll call this as a standard asset. If the loan is not repaid, even after 90 days from the due date, then we'll call this as NPA. Is it okay? I'll repeat it again. Right? I'll repeat it again. If a loan is issued to, right, a customer and the loan is repaid, I'll simply call this as a standard asset. But if the customer takes a loan, doesn't repay even after the due date, 90 days after the due date, then I'll classify this as non-performing asset, NPA. Right? And within the non-performing asset, then again there are 3 classifications: substandard asset, doubtful asset, and right, loss-making asset. Now, what is the basic idea for substandard, doubtful, and loss-making? If an account remains as an NPA for a period up to 1 year, I'll repeat it, don't be confused, understand the calendar concept here. You take a loan, on the 1st of January, imagine you are supposed to make certain payment. You don't make the payment. So from the 1st of January, I will wait for next 90 days. And even after 90 days from due date is over, if you don't make the payment, I will classify this as NPA. Now, if this account remains an NPA for next 1 year, we'll call this account as a substandard asset. Now, after 1 year is over, for the next 3 years, I repeat, after 1 year is over, For the next 3 years, this will be classified as doubtful asset. So for 1 year, it is a substandard. For next 3 years, it is a doubtful. So totally after 4 years, I will classify this account as a loss-making asset. Is the classification okay with you? Let me know. Is the classification okay? Right. So this is how NPAs are classified. Now, before classifying this as an NPA, there is one more concept here. Immediately after the first day, let's say 1st of January, that's a last day for you. Immediately after 1st of January, they don't classify this as NPA. Right? For next 90 days, they'll wait. But during those 90 days, you cannot call it as a standard asset because you are yet to receive the payment. Nor can you call it as an NPA because 90 days are not over. So what will you refer to it till the end of 90 days? You will refer to this as special mention account. You'll refer to this as special mention account. That is 1st of January is over. Next 30 days, we'll refer to this as SMA 0. 31st day till 60 days, SMA 1, and 61st day to 90 days, SMA 2. And after 90 days are over, non-performing asset, NPA, non-performing asset. Is it clear? This is how the accounts, loan accounts are classified in a bank. Sir, why is this required? Simple, you're a manager. You're a manager. An account becomes a special mention account. Should it be concern for you? Of course, yes. It becomes SMA 2. Much higher concern for you. Because in the next 30 days, after SMA 2, in the next 30 days, it will be classified as NPA. So that's the reason this classification is used by the banking sector. And by the way, this is provided by RBI. Reserve Bank of India says every bank has to keep on classifying it. Now, in case of India, the NPAs are higher. Right? Non-performing assets are higher. But having said so, here is a very latest current affairs. Important, by the way. The NPAs in the banking sector have actually started coming down. Is it okay? I'll repeat it again. NPAs in the banking sector have started coming down. For example, RBI itself says the NPAs in the banking sector have fallen to 7-year lows in India, which is a good indicator. All of you will agree? Which is a good indicator. But now in the first place, the question arises, why are the NPAs high? Right? What is the reason why NPAs are high? This is the reason. The companies have taken loans. Simple, companies have taken loans. They are not able to sell the goods either in the domestic market or in the international market. You might simply say, sir, right, any example of this? Pandemic. Sir, before pandemic, crisis in 2008. Right, so there have been crises one after the other in the international market. So here are the reasons. One, companies have taken the loans. There is an issue in the international market. Companies are unable to export. In the domestic market, there is a slowdown, there is a recession. They are not able to sell it in the domestic market as well. Now you tell me, simple question by the way, you tell me, if a company takes a loan, produces goods, unable to export more, nor able to sell it in the domestic market, what do you think will happen to revenues of the company? Revenues of the company will fall down. Can the company incur a loss? Yes, possible. Now, if a company incurs a loss, will they continue to repay the loan? Is it okay? Will the company, right, which is incurring a loss, will they continue to repay the loan? Where is the money to repay? They will default on the repayment. So the NPAs have started increasing or have increased in the past. Right, so lower global demand and slowdown in the domestic market. Next, number of willful defaulters are also higher in India. The question is, what is a willful default? Right? Willful default simply refers to a system wherein a borrower purposely will not repay the loan. I'll repeat it. What do you mean by willful default? It's a process wherein a borrower purposely will not repay the loan. For example, imagine, right? I hope you understand. Imagine I'm a very big businessman. I have lot of assets. What does it mean? I have the financial capability to repay the loan. I have the power to repay the loan. But I will purposely or willfully default on the repayment. That RBI says is willful default. Is it okay? RBI says it's nothing but willful default. In India, number of willful defaulters are very, very high. Very, very high. It came to a point where Supreme Court of India started asking the banks to give a list. Right? Supreme Court of India told the banks, you give me a list who have taken a loan, who have the capacity to pay, but don't decide to pay and willingly are defaulting on the loan. You give me the list. Right? So number of willful defaulters are very, very high in India. Inefficient functioning of Debt Recovery Tribunal. DRT simply means Debt Recovery Tribunal. Understand this very carefully. What is this idea of a Debt Recovery Tribunal? Government of India back in 92-93 introduced one act, right? Passed a bill, introduced the act, Recovery of a Debt Due to Banks and Financial Institutions Act. And as per the act, they established an authority by the name of Debt Recovery Tribunal. And you'll have to remember this. Please understand this. If there is an individual borrower who takes a loan and defaults on the repayment, then the bank will file a complaint against this individual at DRT. DRT long form is there here. If a company takes a loan, doesn't repay the loan, then the bank will file the case against the company at NCLT. What is NCLT? National Company Law Tribunal. National Company Law Tribunal. Is it okay? Right? So whenever you and me will take a loan and we don't repay, bank will go to DRT, file an application against us. If a company takes a loan, doesn't repay, bank will basically go to NCLT, file an application. Now have a look at this. When we established a Debt Recovery Tribunal, we expected that whenever the applications are filed by the banks, within 180 days, the application will be cleared. The tribunal will issue an order, ask the borrower to repay the loan. Otherwise, the assets will be seized and sold in the market. This is what we expected would happen. But over a period of time, the number of cases or number of applications filed have kept on increasing. And when the number of applications increase like this, is it possible to clear the applications within 6 months? Just think of it. Is it possible to clear all these applications within 6 months? And that has been the fact. We expected it would be done in 6 months. In many of the cases, more than a year is being taken. More than 2 years are being taken to clear the applications. So when the borrower has taken the loan, they don't repay, account becomes an NPA, I will go to DRT, file an application, they take 2 years, 3 years, etc. to clear the application. Don't you think NPAs in the system will keep on mounting? NPAs in the system will keep on increasing. And finally, governance issues. I'll give a very simple example. Right? Imagine you want to construct a road, but somebody will go to Supreme Court of India, file an application saying that the road that is being proposed and being constructed, it runs through ecologically sensitive area. It runs through wildlife sanctuary, etc., etc. Now the Supreme Court of India will ask you, change the road. Whatever plan you have, it's not possible. Take a detour, right? Construct a bigger or lengthier road like this. What will happen? If that is possible, you will construct it. If it is not possible, if you are going to incur a loss, why will you even complete the road? Right? Don't you think as a result of this, the infrastructure project will not be completed? If you have borrowed money to construct the road itself is not complete, where will you repay the loan from? How will you repay the loan? You will default on the loan. The asset will become NPA. I hope you understand. Right? Because of ministry, many of the times, many of these ministries do not give approvals, do not give licenses, or the court will put a stay on the construction of the project. All of this will basically push up the cost of the project. It might reach to a certain extent that there is no point in even completing the project, because anyways you are going to incur the losses. So by default, these assets will become non-performing assets. Is it okay? So these are some of the reasons in India to which have contributed to rise in the non-performing asset. Now, if the NPAs are higher, if the NPAs are higher, what will happen? This is the system. If the NPAs increase, first, the bank's profitability will come down. All of you will agree? If NPAs are higher, banks' profitability will come down. Banks might even incur losses. Now, simple question to you, if the bank is incurring losses, will they continue to give loans at lower rate of interest? Just think of it. Right? A bank is incurring a loss from certain sector, let's say infrastructure. Do you think the bank will continue to give loans at lower rate of interest? No, they would want to recover some of the losses. They would want to earn more interest so that the losses will come down. So the lending rate by the banks could be higher. Right? The borrowers would be affected by that. Infrastructure investment would be affected because of it. Right? And because of all of this, don't you think the growth prospect of Indian economy would also come under pressure? Borrowers are unable to take a loan at lower rate of interest. Banks are incurring losses, so they want to recover the losses by imposing higher rate of interest. Right? Investors who want to invest in a bank, purchase the shares of the bank, they are worried about losses of the bank. They don't want to invest in the bank. All of these are the outcomes, right? All of these are basically the outcomes of having a high non-performing assets in the banking sector. Okay? So we have discussed what is an NPA, how do you classify an NPA, then we have discussed right, why NPAs are higher, and if the NPAs are higher, what is the problem? Now come to solution. What is the solution for having high NPAs then? Simple. 2016, Government of India introduced Insolvency and Bankruptcy Code. Okay, understand this. 2016, Government introduced Insolvency and Bankruptcy Code, IBC. And right, this particular process of IBC, RBI itself says, has been successful. It has been successful. Again, when I say successful, are there any problems? Of course, yes. What are the problems? We'll understand in some time. But compared to pre-IBC, before IBC, right, what cases were taken up, how many have been resolved, etc., etc., IBC has a better success rate compared to pre-IBC situation. Now, what is the idea of IBC? IBC simply stands for Insolvency and Bankruptcy Code. Is it okay? Insolvency and Bankruptcy Code. Now, under the Insolvency and Bankruptcy Code, we have set up a regulator. For example, banking sector, there is a regulator. In the same way, for IBC also, there is a regulator, Insolvency and Bankruptcy Board of India. Very often you will come across in the newspaper, the acronym is IBBI, Insolvency and Bankruptcy Board of India. Apart from this, insolvency resolution process now will be handled by a professional, insolvency professional. Now, what do you mean by insolvency resolution? Simple. Here is a company. Here is a company has taken loan from a bank. A loan is given by the bank. The company doesn't repay the loan. They will not repay the loan. Now, simple question is, what should we do with the bank? I'm saying, what should we do with the company, not with the bank, right? What should we do with the company? Should we sell the company? Should we sell it to a buyer in the market? Should we sell the company to a buyer in the market and recover the money? Or should we simply close the company? Right? Should we simply close the company? Close means what? Winding up. Winding up of the company, or else they will also use the term liquidation of the company. Is it okay? Should we wind up the company or liquidate the company, that is close the company, or should we sell the company to a new buyer? And whenever you decide to sell the company, it is called as insolvency resolution. This is referred to as insolvency resolution. Any difficulty, do let me know. Right? Imagine you're a bank. I'm owner of the company. I took a loan from you. I'm unable to repay the loan. I've defaulted. Now, the decision has to be made because you need money. You need to recollect the money. What should be done? Should we sell the company to somebody else in the market so that you will get the money? Or we should close the company, liquidate the company? Now, let me ask you a simple question. Think like an economist and tell me which of the two is good. Is a sell-off good, that is insolvency resolution, or closure is good? Right? Sell it to a buyer. Thanks a lot. Sell it to a buyer. Why? If you close the company, people will be removed from the job. Is it okay? Imagine, right? Imagine I'm a company which is manufacturing steel and I'm supplying steel to somebody else who is manufacturing flask. Don't you think if my company is closed, supply of raw materials would be affected in the market? I hope you understand. Right? So understand the logic here. They use two terms and these can be used by UPSC to confuse you. Is it good to have destruction of capital? Is it good to have destruction of capital or protection of capital, or let's say conservation of capital? Is it okay? Is it good to have destruction of capital, or it is good to have protection or preservation or conservation of capital? Obviously, you should go with conservation of capital because the company is already there. You don't have to close it, sell it to somebody else. They will start to operate the company. Right? People will not be removed from the jobs. Right? Suppliers in the market will continue to supply, etc., etc. Right? So that's the reason. Remember, these kind of technical terms can also be used by UPSC. Please be very careful. Now, this is insolvency resolution, which will be handled by an expert. The insolvency resolution will be conducted in a stipulated time period. What is the process? I'll show it. Just give me some time. How it is conducted, I will show it. Just give me some time. There is a separate process for individuals as well as for companies. For UPSC, do not worry about the process followed by for individuals. Focus on companies. Please focus on companies. You do not have to become an expert. You don't have to become an insolvency professional. Understand the process, go ahead. Now there are two tribunals, already we have discussed this. There is a DRT which will take up the cases of individuals, and there is a NCLT which will take up the cases of companies. Now come to the process here. First step, either the lender or borrower will approach NCLT. What is NCLT? National Company Law Tribunal. Either the lender can go or even the borrower can go. They can go to NCLT and file an application. Now once the application is filed, in the next 14 days, NCLT either has to accept the application or reject the application. Is it okay? Once the application is filed, NCLT in the next 14 days either has to accept it or reject it. Now let's say they have accepted the application. Now an insolvency professional is appointed. He is an expert. He is the one who knows how to conduct the insolvency resolution. So insolvency professional is appointed. Now the insolvency professional, next step, he will basically put together all the creditors. I repeat, he will basically put together all these creditors. But when I say creditors here, please remember, these are generally the secured creditors. I hope you understand. These are generally the secured creditors. So secured creditors will be put together. A committee is formed. Now this committee will decide, should we sell the company to a buyer in the market or should we liquidate it? Now when I say committee will decide, it's not that they will go and search for companies. Other companies will file applications. Is it okay? Other companies will file applications. Right? The other companies will come forward and say, I want to purchase it at, let's say, 100 crore. I want to purchase it at 120 crore, 130 crore, like this. So when other companies will come forward, give a proposal to the committee. Now the committee will decide, should we sell the company or should we close the company? Now what if the committee is unable to decide? Is it okay? What if the committee is unable to decide it? In that case, simply understand this, the company will be liquidated. Sir, what do you mean by deciding? In certain cases, 51% voting is required. In certain cases, 66% voting is required. Now, don't get into all of that voting, weightage, who is given more weight, who is given less weight. All these are very technical, not at all required. So, argument is simple, right? The committee of creditors will ask for proposals. Basically, they're asking, right? Tell me who want to purchase it at a higher price. That is a concept of basically auctioning, right? So anybody comes forward with a higher price, the committee will decide to sell it to the buyer. Otherwise, we will simply liquidate the company. This is how the process is conducted. This is how, right, basically the process is conducted. As per the policy of Government of India now, the process should be over in 330 days. Is it okay? As per the policy of Government of India, the process of insolvency resolution should be conducted within 330 days. Now, some of the books are saying 270, please update it. Until last year, it was 270. Now it has been increased to 330 days. Right, so this is how Insolvency and Bankruptcy Code will actually function. Now, what is a critical evaluation? If a question is asked, discuss the effectiveness of Insolvency and Bankruptcy Code. I'll come to this. Let me see whether I've given the picture or not. Just a second. Okay, it is not there. Don't worry. Right, what is this idea of a critical evaluation? You'll have to discuss what has been the success of IBC. At the same point of time, you'll also say, what are the concerns? Are there any issues with the functioning of IBC? Let's start. It represents a unified framework. Unified simply means single policy or single framework. Now you will ask me, sir, what do you mean by unified, or what do you mean by a single framework? Let me explain it. I said IBC has been implemented from 2016, somewhere around September 2016. Then before 2016, what was the process? I hope you understand. Before 2016, how the process was conducted? The problem before 2016 was that there was no single law to conduct insolvency resolution. Understand my statement. Before 2016, there was no one law to conduct insolvency resolution. There was a law called as there were certain provisions which were taken from Companies Act. Right? There was basically one more authority called as BIFR, Board for Industrial and Financial Reconstruction. There were certain provisions under SARFAESI, right, etc., etc., etc. All I'm trying to say is simply this: there were multiple laws regarding insolvency resolution. Now, I will ask you a simple question. Would you want multiple laws for conducting insolvency resolution, or one law for conducting insolvency resolution? Start participating. Start participating. I know 6 o'clock, 6:15, right? Some of you are already tired, right? Understand this, right? A lot of important concepts, current affairs I'll discuss. Rather than having multiple laws, now what I've done is, I've taken all these important provisions from all the laws, I've put them under only one law. Don't you think having a single framework, having a unified framework is always better? Is it okay? Right? So that is one point. Right? Unified framework. Second, under the current situation, the law says the process has to be conducted within 330 days. Is it okay? As per the law. What's the reality? We'll understand it later. Please don't worry. Right? The law says the whole process has to be conducted within 330 days. That is also very good. Third one, compared to earlier situation, the time that is taken now is much, much lower. Sir, any data to prove that? Let me quote a data here. Before the IBC was implemented, before the concept of insolvency and bankruptcy code was implemented, there was one survey conducted. And as per the survey, it took somewhere around 4.3 years in India for conducting insolvency resolution. Is it okay? I'll quote the name of the survey company also. Alvarez and Marsal. There is one survey authority or one survey company, Alvarez and Marsal, research company. Alvarez and Marsal stated that for conducting insolvency resolution in India, on an average, it takes around 4.3 years. Don't you think that's a very, very high number of years? Right? So compared to the earlier situation, now the time period has been brought down. But even then, please understand, I'll come to this. Right? In fact, have a look at it. I'll come to the problem here. As per the law, we are supposed to complete it within 330 days. And somebody says 336 days. Please check it. As far as I know, it is 330 days. Earlier, it was 270. It was extended to 330 days. But anyways, check it. Check it. So argument is, as per the law, you are supposed to complete it in 330 days. But very recently, various authorities, research companies have found that we are crossing that number of 330 days. Rather than getting it done within 330 days, in many of the cases, we are still taking 1 year. We are still taking 1.5 years, etc. Now, some of you will ask, sir, how is that possible? When the law says we are supposed to complete this in 330 days, how can you say that we are still taking in some of the cases more than 1 year? How is that possible? Let me explain it to you. You don't have to write this in the exam, but understand why it is happening. Imagine both of us have given loan to a company. Okay, both of us have given a loan. Now the company has not repaid the loan. We will go to NCLT, file an application. Now the process is happening. I will go to Bombay High Court, file a complaint against this company. I hope you understand now. Right? Regarding something else, I will file a complaint. Now, simple question to you people. Should we continue the insolvency resolution or should we wait for completion of that case first? Now, I hope you understand why there is a delay in the system. Is it okay? I hope you understand why there is a delay in the system. So, there is a concern that despite, right, no doubt, compared to earlier system, this is much better. I'm not saying this is very bad. I'm saying this is much better. But are we able to stick to 330 days? In many of the cases, we are not able to do that. Right? That is the reason. Provides the power to the creditors, both secured and unsecured. Now, what is the importance here? Let me give a very simple example. A bank will give a loan to a company, and a company has provided certain collateral to the bank. Can I call this bank as a secured creditor? Is it okay? The bank has given a loan to a company and the company will provide security, secured creditor. But please understand this very carefully. Imagine there is a raw material supplier. Raw material supplier to the company. Or else I will simply write the term vendor. I'll simply write vendor. Vendor means what? Supplier. Now the supplier will supply certain goods to the company. How many of you think the company will make the payment on the same day? Let me see. The vendor has supplied raw materials, right, or let's say goods, etc. to the company. How many of you think that the company on the same day will make a payment? No. Right, remember this. No, this is not how the market works. What they will do is, the company says, give me time. There is a term called as credit cycle. You don't have to be worried. The company says, give me time. That is, come after 60 days. I will make the payment after 60 days. And that is how the market works. You might ask me, sir, why? My dear, if I've purchased raw material from you, I'm yet to make a product, sell the product, generate revenues. You want me to make the payment on the same day? How is that possible? That's the reason there's a concept of credit cycle. Now look at this. Look at the example. I'm talking about this example, by the way. Look at this example. Is it okay if I say the vendor is also a creditor but unsecured creditor? Let me know. The vendor is also a creditor but unsecured creditor. Any problem here? Please do let me know, because I'll go to the point now. Anybody has a doubt here? Right? Meaning what? You have given raw material, let's say worth 2 lakh rupees. You have given 2 lakh rupees. You will take it back after 60 days. Are you not a creditor? But you are an unsecured creditor because you have not taken any security. Now, earlier, what was the problem with the system? Understand this carefully. Earlier, what was the problem with the system? If you are a secured creditor, you can simply file an application at NCLT, right? Drag the company. If you're unsecured creditor, if the company doesn't repay, then you'll have to go to civil court, file an application in the civil court. And do you think the civil courts in India will take up the case very, very quickly, resolve the cases very, very quickly? If you say yes, I know it could be because of, right, the duration of the class, but not because you know the reality of. Right, in India, please understand, judiciary takes a lot of time. It takes hell lot of time. Right, so the argument was simple. The civil cases will drag on for many, many years. Now, if you are a vendor, what is the solution for you? You know that if you go to court, the cases will drag on for many, many years. Now look at the beauty of IBC. Whether you're a secured creditor or unsecured creditor, doesn't matter. You can file an application at NCLT. Is it okay? Whether you're a secured or unsecured creditor, doesn't matter. You can go to NCLT, file an application. And if the application is accepted, owner will end up losing the ownership of the company. Now tell me, don't you see that there is a change in the behavior of the owners of the company now? Is it okay? Because the owners are concerned, sir, how owners will lose the ownership? My dear, then what are you listening to? What were you listening to when I said selling off of the company, etc., etc.? Right? When you sell off the company to somebody else, does it not mean that you are losing the ownership of the company? Right? I don't know. And what did you understand when I say sell off? I don't know. Okay. So sell off means obviously there is a new owner. You are not the owner anymore. That's a reason. Focus on the discussion. So there is a concern amongst the owners that if I don't repay to the vendor also, there's a danger that I might lose the ownership of my company. Now tell me, will it lead to a change in the behavior or not? Unlike earlier system, now they are concerned. They will change their behavior. They will make the payments promptly to secured or unsecured lenders. And because this is a single framework, it's a single policy, it will promote ease of doing business as well. Okay, so these are some of the positive outcomes associated with Insolvency and Bankruptcy Code. Having said so, are there any concerns? Yes. First one, as per the law, the NCLT either has to accept or reject the application in 14 days. Simple. They'll have to either accept or reject in 14 days. But in reality, the standing committee says in many of the cases, the NCLT has taken more than 100 days. I hope you understand this. In reality, in many of the cases, NCLT has taken more than 100 days either to accept or reject the application. Now, if it takes more than 100 days to either accept or reject the application, don't you think the whole process will be delayed? That is one problem. Actual time taken for resolution is more than 1 year in many of the cases. Most of the cases are going through liquidation. Rather than saying most of the cases, you can simply replace it now, because as per the latest economic survey, 61% of the cases have gone through insolvency resolution, sell-off. Remaining have gone through liquidation. So a large number of cases are going through liquidation. Don't you think the objective of preservation of the capital will be lost there? Liquidation means closure of the companies. You should have a preservation, not destruction. So liquidation is leading to destruction of the capital. We need to address this as well. And finally, recovery rates are also on a lower side. What do you mean by recovery rates? Imagine a bank has to collect 100 crore rupees. How much out of 100 crore will they get? Imagine they are supposed to get 100 crore, but after selling the company, if they get only 40 crore rupees, can I say recovery rate is 40%? Let me know. Can I simply say recovery rate is 40%? So the recovery rates under IBC are slightly on a lower side. It has to be increased. Okay, so these are some of the critical evaluation points in connection with insolvency and the bankruptcy code. Can I go to the next one? NARCL, current affairs. The concern, third point, getting through liquidation. Large number of cases are going through liquidation. Meaning what? Rather than selling of the company to somebody else, we are closing the company. Closing the company means what? Unemployment. Right? Machines are not used. Disruption in the supply, etc., etc. Okay? Can I go to the next one now? NARCL, important current affairs. Current affairs point, NARCL. Basel norms are binding on the government. Please understand. It is not applicable to government. It is more importantly applicable to central bankers. That is the Reserve Bank of India. Okay, let's start. What banks do with capital as per CAR requirement? They'll keep it themselves only. Right? For example, the equity capital, the money is there with the banks only. You're not supposed to invest somewhere, then you don't have money. I understand. The capital that is raised is there with the bank itself. Okay, now what is this NARCL? National Asset Reconstruction Company Limited. National Asset Reconstruction Company Limited. Let me address it first. That is ARC. Very often you'll come across the term called as Asset Reconstruction Company. Asset Reconstruction Company, ARC. Now the ARCs are very, very old in India. I hope you understand. It's been more than 2 decades since the ARCs are working in India. But now what do you mean by ARC? Let me give a very simple example. Imagine here is a bank. Bank has given a loan to a company. The company doesn't repay, becomes an NPA, non-performing asset. Non-performing asset. Now what the bank can do is basically take the company, sell it to an asset reconstruction company, hand it over to asset reconstruction company. And generally what the asset reconstruction company does, they will try to find a buyer in the market, sell the company to the buyer in the market, collect the money and hand over the money to the bank. I hope you understand the process here. I'll repeat it again. What is an ARC? It is a financial institution which is involved in selling up of the assets which are non-performing assets in the banking sector. Now some of you will simply ask, sir, why is the bank doing it? What is the reason? Why are the bank giving it to an ARC? Simple question to you people. Do you think the bank is an expert in selling of the assets in the market? Think of it very carefully. Do you think the bank is an expert in selling of these assets in the market? They know how the market operates. They know what price to quote, etc., etc. Answer is no. And as expected, some of you are asking, sir, IBC also does the same thing. Under IBC also we are doing the same thing. Now, if you followed my discussion, you would have understood this. I said IBC has started working from when in India? From when IBC was implemented, right? 2016. And what did I say? ARCs have started working in the context of India more than 2 decades. Now, don't you think both have started functioning in altogether 2 different eras? The problem with ARCs was that banks had a lot of these NPAs. They were not able to sell and get better recovery through ARCs. I will repeat it again. Right? I'll repeat it. Understand this. ARCs were there. In fact, in India, there are more than 20 ARCs. Asset reconstruction companies. There are more than 20 ARCs. So the banks in the past also, they have gone through the ARC route. But the amount of recovery that the banks have been able to get is very, very low. Many of the times the recovery was done in single digits. Single digits. Such a very, very poor performance of ARCs. And looking at that only, right, this was also one of the reasons why Government of India went ahead, set up Insolvency and Bankruptcy Code. Is it okay? That is a basic idea of, right, the concept of ARC, Asset Reconstruction Company. Now let me start with National Asset Reconstruction Company Limited. But before that, I'll ask a very simple question to you. Just think of it and answer. From 2016, we have IBC. And many of the companies were brought under IBC, either were liquidated or were sold off to somebody else in the market. Now, let me ask you a very simple question. Imagine you have 100 crore rupees You want to purchase a company. Now, would you want to purchase a company which has been closed or which has not manufactured anything for more than 8 years, 10 years, or the company which has become NPA very, very recently? Let me know. Right? Two situations I'm giving you. First situation, there was a company which was manufacturing, but it has not manufactured anything. It has remained a non-performing asset for, let's say, around 8 years. There is one more company which has recently become an NPA that has been dragged to IBC. Now it is there for sales. Will you not prefer the latest one? I hope you understand. Will you not prefer the most recent one? Why? It's a recently become NPA. You can restart the manufacturing very, very easily. But on the other hand, what about the company which has not been manufacturing for last 8 years, for last 7 years, for last 6 years? Can I call this first example as a legacy NPA? Can I call the first one as a legacy NPA? Is it okay? Can I call the first one as a legacy NPA? Any problem with this? Let me know. Legacy NPA means the NPAs which are of very, very old, or these have become NPAs for a very, very longer duration now. Why the legacy NPA is a problem? Many of these companies which have become legacy NPAs, there are no buyers for it under IBC. I hope you understand this. There are no buyers under the IBC, right? Companies are not coming forward to buy this. And even if you put up the NPA, which is our company which has remained NPA for 7 years, who will come now? So that is the precise reason Government of India said there are older NPAs. If a new NPA will appear, that is, if a new company becomes an NPA, I'll put it under NCLT. That is, through IBC, I'll try to conduct insolvency resolution. What should I do about older NPAs? To address it, government has introduced, or government has set up, National Asset Reconstruction Company Limited, NARCL, National Asset Reconstruction Company Limited. Now, before I start, here is an important point. Don't you think after a certain number of years, legacy NPAs will be over? Just think of it. Right? Many of you will get confused whenever you're reading these kind of concepts. Simple question to you. After a certain number of years, the older NPAs or legacy NPAs, will all of them will be over? Over in the sense, will all of them be either be purchased or sold to, right, a buyer at very, very low prices, or closed? Will that happen? Of course, yes. Now, if that is the situation, what do you think? NARCL should be closed after a certain number of years, or we should have NARCL continuously working in India? Just think of it. Should we have the NARCL which works continuously in India, or after a certain number of years, we should have closure of the NARCL? Just think of it. Some of you are saying, sir, continue, continue, continue. Maybe. What is maybe here? Maybe continue, maybe close what? You should close it. You should close NARCL. Why? My dear, I'm saying it. Please understand what I'm trying to say. Imagine there are 5 companies which have remained NPA for last 6 years. I understand. There are 5 companies which have remained NPA for last 6 years. Now, either through NARCL you will close, or you will try to find a buyer in the market. And let's say in the next 2 years, all these companies are sold. All these companies are sold. Now, what is the role of NARCL after that? You tell me. What is the role of NARCL after that? You'll say, sir, what if there is a new NPA? My dear, if there is a new NPA, we have IBC. I hope you understand. We have IBC now. What is the role of NARCL then? That's the reason you will read in the newspaper, NARCL, the proposal right now says it will function for 5 years. It will function for 5 years. And there are NPAs to the tune of around 2 lakh crore rupees in India. We want to sell it off as soon as possible. We want to sell it off in the market and clear all these old NPAs. That is the role of NARCL. Now, first point, NARCL 51% will be owned by public sector bank. PSB means public sector banks. It will also have an operational entity, that is, in simple terms, NARCL will take the NPA from the bank, give it to one more entity which will then be selling that in the market. That is IDRC, Indian Debt Resolution Company. Next, for proper functioning of NARCL, Cabinet, that is Government of India, has approved 30,600 crore rupee guarantee program. I'll come to this, I'll explain this, have patience. The bad bank, now there is one more term, bad bank. Now many of you ask me, sir, what do you mean by bad bank? Simple. Bad bank simply refers to a financial institution which will take away the bad assets or NPAs from the bank. Is it okay? Let me know if you disagree or if you have a doubt with this. What do you mean by a bad bank? It is a financial institution which will purchase or which will take the non-performing assets or bad assets from the bank. Rather than having NPAs in every bank, we'll take all these NPAs, put it under only one bank, which is called as a bad bank. Shall I go to the next point? Is the concept of bad bank clear to you? And what is this NARCL doing? It is basically taking away, right, the legacy NPAs from the banking sector. So bad bank will be taking over and resolving NPAs to the extent of 2 lakh crore rupees. And the government will be providing guarantees for 5 years on the security receipts issued by NARCL. What is this security receipt? What is this guarantee program? Let me explain it to you. Have a look at it. This is the most simplified version of how NARCL will function. Most simplified version. Let's start. Here is a bank. The bank will transfer the non-performing asset to NARCL. It will transfer NPAs to NARCL. Now imagine you are the owner of the bank or manager of the bank. If you are going to transfer NPA to the NARCL, you will basically say, right, I want a recovery of, let's say, 50 crore rupees. Right, basically you have come to an agreement. Right, imagine I am NARCL, you are a bank. You will give the NPA to me and both of us will come to an arrangement. Okay, I will give you 50 crore rupees by selling the asset in the market. Now, the issue is simply this. Generally, whenever the agreement is done like this, right, that is a realizable value. In simple terms, how much is the bank expecting in the form of payment after sale of an NPA? Certain amount out of this, usually 15% of it, the NARCL will pay it in the form of cash. Cash in the sense, amount will be paid. Full 50 crore is not given. 15% of it generally is given. What about remaining amount? Right, let's take 50 crore itself. 15% of 50 crore will be how much? 7.5 crore rupees. NARCL will provide 7.5 crore rupees to the bank. What about remaining 42.5 crores? What about remaining 42.5 crores? Amount is not given, rather certain documents, securities are issued. Is it okay? 42 crore money is not there with NARCL. Rather than giving 42 crore also, security receipts are issued. And NARCL says, let me sell the asset in the market, then I'll bring the money and take the security receipt from you and give the 42 crore rupees. Is it okay? I'll repeat it again. If the agreed value is 50 crore, 15% of it is paid by NARCL. Remaining 85%, NARCL doesn't pay the money because they don't have it. So what NARCL says? Keep this receipt. Keep this receipt. And once I sell the asset, get the money, give the receipt to me, I will give you 42 crore rupees. Done? Now NARCL will hand over the NPA to IDRC. IDRC will try to find a buyer and sell it in the market. Right? They will try to find a buyer and sell it in the market. Now many of you will ask, sir, what if they don't what if they don't find a buyer? Simply liquidate then. Simply liquidate. If there is nobody to buy, then the only option is liquidation. Now have a look at this. They will sell it to a buyer, collect money, transfer it to NARCL. NARCL will give the money to the bank. Now here comes the problem. What is the problem? The NARCL has guaranteed they will pay 50 crore rupees. What if, understand this carefully, what if NARCL through IDRC, when they will sell it to a buyer, they're able to collect only 40 crore rupees. They're able to collect only 40 crore rupees. In fact, they also need certain commission, certain charges have to be imposed, etc., etc. Now, simple question to you people. They have earned 40 crore rupees. Can you pay 50 crore using 40 crore rupees? Possible. Right? Just think of it. Is it possible to pay, right, remaining 42.5 crore rupees when you have only under 40 crore rupees? It's not possible. In that case, Government of India says, right, shortfall is how much? What is the gap here? 2.5 crore rupees. Government says that remaining 2.5 crore rupees, I will pay. Is it okay? Right, that remaining 2.5 crore rupees, I will pay. And that is the precise reason government has set up a credit guarantee or a guarantee program here. Right, wherein Government of India has proposed amount to the extent of more than 33,000 crore rupees. Right, is it okay? Right, more than 33,000 crore rupees has been set aside by Government of India. If the NARCL doesn't realize a sufficient amount, if there's a shortfall, then, right, basically, right, the government will use the money to pay the amount to them. Right, this is how the process is actually followed. How 2.5 crore will come? Again, you don't worry about all of this. This is how ARCs will work. RBI has a guideline. 15% you will have to pay it upfront. Remaining 85% security receipts have to be issued. Then there's a concept called as a securitization of the debt, etc., etc. For UPSC, you don't worry. This is more than sufficient. Just stick to this. Trust me, even books have not discussed this. If UPSC will ask you, you should know it. That's the reason I'm discussing it. Right? You don't worry about securitization of the debt. How the security receipts are materialized, etc., etc. You don't worry about it, right? That's only required for, right, let's say CAs or let's say company secretaries. And just stick to this, more than sufficient for UPSC. Okay, done. Now, what is the critical evaluation of the concept of NARCL? Right, what is the critical evaluation? Right, what are the good points here? One, the NPAs or stressed assets, right, which are there in the banking sector for many, many years now, will be transferred to only one entity. Now, don't you think if the banks will give away all these NPAs to one entity, they will not be worried about clearing the NPAs? They are not focused on, right, mounting NPAs or higher NPAs. It has been transferred to one entity. They will say, okay, right, they will sell it, they will give me money. So banking sector now can focus on their expertise or area of expertise, that is lending and mobilization of the deposits. So first one is this. Second one, right, the banks can focus, as already mentioned, banks can simply focus on their expert area, giving loans, raising deposits, right, etc. Third one, the balance sheet of the banks, because the NPAs are taken away by NARCL now, the balance sheet of the banks will become much more clear, or the pressure on the balance sheet will be much lower. Banks will be able to raise more money from the market, showing that, see, I do not have any NPA. Next, right now the focus of NARCL is to basically resolve bigger assets, then focus on the smaller NPAs. Because the logical argument is simple, right? If I give you an example here, would you want to clear 4 NPAs which are of, let's say, 1 crore rupee, 2 crore rupee, 3 and 4 crore rupee, or you want to resolve one NPA whose value is 100 crore rupees? Your option should be, sir, I'll go with the second one. Is the logic okay? Right? If I ask you, should you want to go with, right, let's say resolution of 4 NPAs of smaller value, or you want to resolve a very big NPA of larger value, you should choose the latter, not the first one. That's the reason. Have a look at this. Right now, NARCL is focused on resolving those NPAs whose value is more than 100 crore. And once these are resolved, now we'll basically come to smaller NPAs. These are the advantages. Pros. Now, what about the cons? What are the concerns? First one, this reform will only address the problem. It is not going to provide a resolution for reduction of creation of NPAs. I hope you understand my statement. I'll repeat it again. This NARCL, it's a good reform. I'm not saying it's a bad reform. It's a good initiative. But NARCL will address the issue of higher NPAs. NARCL will not reduce the creation of NPAs. Sir, what do you mean by that? I'll give a very simple example. Don't you think the banks, when they decided to give the loans to Kingfisher, they should have studied more, they should have ensured all the appropriate steps are taken and more loans are not given to a company which is incurring very high amount of losses? Is the logic okay here? Right? You're basically giving a cure. But don't you think prevention is always better than cure? I hope you understand this. It's a good reform. And don't criticize me for that. It's a good reform. All I'm saying is, this reform will only address the issue of NPA. But this is not a reform which will reduce the creation of NPA. Right? So that is one. Now some of you will ask, sir, in that case, what should the bank do? How do we reduce the creation of NPAs? Simple. Whenever you give loans, conduct correct appraisal method. Whatever appraisal you're doing, appraisal means what? I'll give a very simple example. Tomorrow you go to a bank, apply for a loan. How many of you think the moment you give the application, your loan will be given? I hope you understand. Right? How many of you think that the moment you sign the application form, give it to the manager, manager will jump up in joy, open the drawer and give you, right, money like this? You think that is how the banks will give you loan? Absolutely no. Right? For example, you apply for loan, let's say housing loan. They will ask you, what is your salary? Then you'll say, sir, salary is this much. They'll ask you, how much of it is variable? How much of it is fixed? That is incentive and fixed. You will give them some certain data. Then they will ask you, for last how many years you have paid income taxes? They will ask a lot of documentation. And it's not just that. They will come to your home, check. Check in the sense, they will check whether you have a collateral to provide or not. They will go to your office, check whether you are working for them or not. They will write to CIBIL authority, check whether your CIBIL score is correct or not. They will go to a bank where you have your account, a salary account. They will check whether the receipt that you have given, it is correct or not. They will send it to head office, that will go to this office, that office, etc., etc., etc. After many weeks of application of the loan, you will get the loan. Right? Can I call this as appraisal process? And that is loan appraisal methodology. So how do you ensure you are giving a loan to the right borrower in the market? Have a very good appraisal process. Simple. Have a very, very good appraisal process. Right? Keep certain systems in place. In case you don't meet these parameters, right? Reject the loan. They will do that for all of us. By the way, they will do that for all of us. But generally, whenever the businessmen will take loan, because they have very good, let's say, links, or they have got very good reputation in the market, or the company size is very large, etc., 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 banks end up giving loans. And when they end up giving loans to companies such as Kingfisher, right, sometimes the company incurs a loss that will translate to bank incurring a loss. Right? So basically, this is the idea. Anyways, because the government is providing guarantees, it may lead to laxity on the part of the bankers and thus create dodgy loans. What do you mean by dodgy loan? I'd follow this very carefully. Imagine I'm a bank manager. You will come to the bank, right? You are a very good friend of mine. You will apply for a loan. I know your company is not doing very well. I hope you understand. I know your company is not doing very well. But because you have got very good links, I will again issue loans to you. Despite the fact that you are not doing very well, company is incurring losses, I will issue loans to you. And now, right, somebody will ask me, sir, why are you doing this? I'll say, anyways, if it becomes an NPA, government will bring a reform. Government has NARCL, will try to go through the NARCL process. Dodgy basically means doubtful, right? Not of good quality, right? So dodgy loans can be created. Right? How many of you heard of loan evergreening? Let me check current affairs, right? Let me check your current affairs. How many of you heard of loan evergreening? Right? Concept of loan evergreening. Right? Basically, under loan evergreening, companies which are incurring NPA or which are contributing to NPA, again the loans are issued to them. I hope you understand. Right? A company has incurred losses. They are not able to repay the loan. Their account becomes an NPA. I will issue a loan to same company again. Some of you will ask, why, sir? You are making a mistake. Why? What is the concept there? Right? What is the sense there? The loan is issued to the company which they will take and repay the earlier loan. Is it okay? I hope you understand this. Imagine I have a loan from bank 1. I'm supposed to make a repayment. If I don't repay, it becomes an NPA. So what will I do? I will take another loan from the bank 1, same bank, and the new loan, I will use it to repay earlier loan. Right? What are we doing? In any situation, is it going to be good for the bank? Absolutely no. But they keep on doing it. This is a very, very, very bad practice that is followed by some of the banks. Okay. Now, so because the government is providing the guarantee there, the banks will not be worried. They'll simply say, okay, let's give loans. If it becomes bad, anyways, NARCL is there, etc., etc. Recovery of the loans which are transferred, how much money they will be able to generate by selling them, it is also very doubtful. Because these accounts or these loans have remained NPA for a very, very long duration. So how much price will be paid by the buyers? That's very doubtful. Okay. So these are some of the concepts related to NARCL. Any doubts here? Regarding NARCL, any doubts? Again, don't enter into technicalities. You don't have to read how ARC works. I'm only saying that. You do not have to be worried about how NARC works, what is securitization of the debt, etc. These are very technical in nature. Right? You can read, you can become an expert as well. But UPSC, there is no use of it. Can I go to the next one? Let's see how many of you are awake. Can I go to the next one? Concept of cooperatives. Right? The idea of cooperatives. Right? Now, what do you mean by cooperative? As already mentioned, cooperative simply means a group of at least 10 people. Simple. Let me start with the basics here. What do you mean by a cooperative? Cooperative simply means a group of at least 10 people, at least 10 people. Otherwise, just a second. Some of you are asking, sir, at very, very lengthy, etc., etc. Just give me a second. Okay, did you people revise taxation that we discussed yesterday? By any chance, by hook or crook, etc., did you get a chance to revise GST? Revise GST, MAT, right? Direct taxes, indirect taxes, etc., etc. Then, so what we'll do is just to change the pace of the class, because already 7 o'clock, most of you are about to sleep. Some of you have a concerning look. In some of your cases, your spouse came, your parents came, right? Shook you, woke you up and went back, right? And some of you are scolding me. Just to change the pace of the class, let's solve some questions. Let's solve some questions. We have not discussed questions in GST or let's say taxation yesterday. Let's solve questions. After that, let's continue with the discussion. Okay, start solving questions here. Okay, only 29% have answered correctly. Why? Let's start. Which one of the following is not a feature of value added tax? Underline the term not. Let's start. First one. It is a multi-point destination based system of taxation. Is it okay if I say VAT is collected at multiple points? Let me know if you disagree. VAT is collected or imposed and collected at multiple points? Yes. Is it collected by the state where consumption happens? Again, the answer is yes. So it is a multi-point destination system of taxation. Yes, it is correct. That is, statement is correct. It is a tax levied on the value addition. Look at the term here. It is a tax that is imposed on the value addition at each stage of transaction in the production distribution chain. At every stage, do we impose it? Yes. Is it imposed on the value addition? Again, the answer is yes. Right? So statement B is correct. Is it okay? Statement B is correct. Statement C. It is a tax on the final consumption of goods and services and must ultimately be borne by the consumer. Now, is it okay if I write this statement C as any indirect tax, this will be the feature? I hope you understand. Any indirect tax for that matter. Can I write the same statement for GST as well? Is it okay? Can I write the same statement for GST? Because even in case of GST, the one who consumes the product will bear the burden of complete taxation. So statement C is correct. Now look at the statement D. It is basically a subject of central government. Value added tax. Just go back to yesterday's discussion. VAT comes under the central government or the state government? In fact, I had written all of this. VAT, does it come under the central government or the state government? If you remember it carefully, I told you this. Central government used to impose excise. State would impose a sales tax. And I said, state governments replace the sales tax with the concept of VAT. Now the statement D says, it is basically a subject of central government. Is it a subject of center or state? It is a subject of state government, right? So the wrong statement, right, which is not applicable to VAT is the statement D. So the right option will be D. The statement D is wrong. Can I go to the next one? Can I go to the next one? Please have a look at it. Okay, more than half of you have answered correctly. But anyways, it should be more than that. Let's start. What is or are the most likely? Underline the term most likely. Right? Most likely means what? It may or may not happen, but the possibility is very, very high. What is or are the most likely advantages of implementing GST, goods and services tax? It will replace multiple taxes collected by multiple authorities and will thus create a single market in India. Statement 1 is correct. Anybody has a doubt? Anybody has an issue with the statement 1? Please do let me know. Statement 1 is correct. It will drastically reduce current account deficit. Some of you, right, may not know what is current account deficit. Perfectly all right, because I have not discussed it. And India will enable India to increase its foreign exchange reserves. Now, I have not discussed CAD. I will only say that I have not discussed CAD. Let's keep the second statement on the side. Just for a second, ignore second statement. Come to the third statement. It will enormously increase the growth and the size of the economy of India and will enable it to overtake China in the near future. Not even in a distant future, in the near future. Now, simple question to you people. How many of you think it is remotely correct? Forget about possible or not. Is it remotely correct? Any situation where you can see only because of GST, India will overtake China. Is that possible? Right? Sir, how can you say it is not possible? Let me give you a data. India's GDP is somewhere around $3.7 trillion. I hope you understand. India's GDP is somewhere around $3.7 trillion. China's GDP is more than 13 to 14 trillion dollars. Now you are to say that just because you are implementing GST, India's GDP will increase by more than 10 trillion dollars. Possible. Just think of it. And let's assume, some of you will say, sir, right, I'm a firm believer. You can do anything. It is just your faith, etc., etc. Then my counter argument is, why did government of India wait for more than 60 years to implement it then? I hope you understand. Then why did government of India wait for more than 60 years to implement GST? Why not implement it immediately after independence? Because here is the fact. India is not the first country in the world to implement GST, by the way. There are more than 150 countries which have already implemented GST. We are the new entrants to that club. So third one is wrong. Even now, does anybody have a doubt regarding third statement? Anybody who is asking, sir, why? Please tell me why third statement is wrong. I still believe India can overtake China with GST. Third statement is wrong. Now have a look at this. Some of you, let's say hypothetically, let's say this appears in the UPSC. Apply your common sense. You will know that third one is wrong. You know first one is the feature of GST. Can you use elimination method? Can we use elimination method? 3 is wrong. Use elimination method. B, C, D, gone. What is left out? A. Even without knowing what is current account deficit, I hope you understand. You have not read current account deficit. Agreed. I will cover it later. Have patience. But even if you did not know what is current account deficit, you can use elimination method, get the right answer. So right option to the question is option A, 1 only. Next one. Okay, this is much more tricky. Look at it, be very, very careful, answer it correctly. Okay, 38% have answered correctly. Why? It should be more, na? It should have been more. Anyways, let's start. These are typically the kind of questions UPSC asks. One is previously elimination method kind of it. You can use elimination here also. We'll have a look at it later. But this is much more analytical in nature. Much more analytical. You should know what is elastic, what is inelastic, etc. etc. Now, before I start, do remember the concept of elastic and inelastic demand. I hope you remember that, because that is what you need. Elastic and inelastic demand. If you say elastic demand, what does it mean? What does it simply mean? If the price changes even by a small percentage, demand will change by a very, very large percentage. All of you will agree? Anybody disagrees? Please do let me know. What do you mean by elastic demand? Elastic means what changes very, very fast or very, very large margin. So if a price changes by, let's say, 1%, demand changes by 9%, 12%, 20%. Can I call this as elastic demand? Right? Is it possible? Yes. On the other hand, there is something called as inelastic demand. I gave you example also when I was discussing the concept. Salt. I said salt has inelastic demand. Petrol and diesel, I said, has inelastic demand. Why? Whatever the prices are there, even if they change by, let's say, 1% or 2%, demand does not change. People will continue to consume them because these are essentials. Is the logic okay? Right? Can I go forward now? Let's start. A higher tax revenue can be collected by imposing higher tax on commodities which have highly inelastic demand. Let's say salt. Government will increase the tax on salt, which will lead to higher tax revenue for the government. Is it possible? Yes. First one is correct. Second one, which have highly elastic demand. Highly elastic means what? You impose a tax, market price will go up. Right? You want to collect more revenues, tax revenues. You impose a tax, market price goes up. What will happen to demand? Demand will fall by a huge percentage. Now, if the demand falls by a huge percentage, we'll be able to collect more tax revenues. Right? I hope you understand. Will you be able to collect more and more tax revenues? No. So, 1 is correct, 2 is correct. Use the elimination methodology. Right? You already got the answer. But anyways, third one, which are habit forming. Tobacco. Sunday evening, alcohol. Right? Don't you think these are habit forming products? Even if the government increases the tax rate, people will continue to consume them because it is a part of their habit now. Right? Don't you think higher taxes, higher prices, people will continue to consume, government will collect more tax revenues. If you disagree with me, do you remember during pandemic, government had basically shut all the shops, especially liquor shops. And after a certain number of months, liquor shops were opened. Delhi government increased the tax rate. Do you think people stopped buying liquor? I hope you understand. You must have seen those funny scenes, right? Or the news cameras, they were showing very long queue for purchasing liquor bottle. Right? Many people who were bringing out of, right, let's say enthusiasm, or they were so much happy, they basically dropped the bottle, the whole liquor spilled. Right? So argument is simple. Again, don't write the examples in UPSC, but application part is important. Second one is wrong. Third one is correct. Right option is option B. Okay. Next, descriptive question. Have a look at the descriptive question here. Discuss the rationale for introducing goods and service tax in India. Bring out critically the reasons for delay in the rollout of its regime. Now, second part, you do not have to be worried. Second part, we have already implemented. Question has already been asked. But I'll tell you why there was a delay. I'll tell you, don't worry. what is the reason? Why did we bring GST? Right? What was the rationale? Rationale means what were the reasons why government brought a GST? What are the reasons? Right? Basically, we have discussed all of them. One, multiple indirect taxes. To promote ease of doing business, to reduce a cascading effect, to promote competitiveness of the manufacturing, exports, etc., etc., etc. All these factors basically are nothing but the reasons why government introduced GST. But now the question arises, second part of the question, right? What were the reasons for the delay, right, of the implementation? Right? Why there was a delay? Simple. One, many of the states were concerned about the impact of GST. Simple. Right? We have never implemented such a very big reform in the Indian economy under taxation. Is my statement okay with you? Under taxation, we have never implemented such a very huge reform, a reform which will have an impact on overall, right, economy in India. We have never implemented it. So there was a concern among the stakeholders. That is, let's say there were concerns which were raised by the state governments. What were the concerns? One, which will be included under GST, which will be excluded out of GST. Right? Don't you think that's a very important concern for them? Second, if GST is implemented, what will happen to my tax revenues? If I don't collect sufficient revenues, who is going to provide me with compensation? Third, if a good is brought under GST, what will be the rate of GST applicable on it? Fourth, what will be the structure of the council? Right? How much voting right will be given to me? Can I individually decide a rate, or the GST council will decide the rate? Etc., etc., etc. So these were some of the reasons which kept on coming up as a dispute between center and state, and it took many years for the central government to convince all the states to implement GST. Right? Is the answer okay with all of you? Let me know. Right? So this is how you address these kind of questions. This is one. Let me show you another question. Another descriptive question. Enumerate the indirect taxes which have been subsumed in the goods and services tax. Also comment on the revenue implications of the GST which was introduced in India since 2017. Two parts to the question. There are two parts to the question. One, you'll have to provide the list. Enumerate means what? List out. You'll have to provide the list of the certain types of taxes which have been brought under GST. Second, you'll also have to comment upon what are the revenue implications of implementation of GST. So let me start with the first one. I've given you a list of certain taxes at the state level and the central level which have been subsumed under GST. Is it okay? I'll repeat it again. I've given you a list of certain central taxes as well as the state taxes which have been brought under GST. That again, you'll have to by heart it. My recommendation is try to remember 3 from the central, or 3 to 4 from the center, 3 to 4 from the state, so that you will have sufficient data to write. Now, what are the revenue implications? What are the revenue implications of the GST? First, revenue implication, the states would be foregoing a substantial number of taxes under GST which would affect their revenue generation capacity. Is it okay? Right? It will basically affect how much revenue, right, they will be able to generate because the taxes have been brought under the GST now. That's the first point. Second, more and more companies or establishments now will be registered with the government. They will have to come under the concept of formalization. Now, what do you mean by formal and informal? Simple logic, right? Do not confuse, do not complicate it. You'll come across two terms, formal and informal. Formalization means either under one or the other law of the government, you have come under the coverage of the government. Coverage of the government means what? You are registered with one or the other authority of the government. Informal means you are nowhere registered with the government. Right? You will not be coming under any of the guidelines of the government. Right? Sir, what is the use of the formalization? You tell me, if the companies which are operating in India are registered with at least one of the authorities of the government, will Government of India come to know how many companies are operating in India? Can Government of India come to know what is the total sales done by these companies? Can government make policies based on right data? Don't you think government will have access to better quality data whenever they are making policies like this? That is the importance of formalization. So more and more establishments now will have to be registered under the GST network, and that will basically add to more and more revenue collection over a period of time. Because you are brought under GST means you'll have to keep on filing returns to the government. And I hope you understand this. You'll have to keep on submitting documents to the government. Government can easily find out how much is your total sales. Right? You are registered now. Now they will ask you, why have you not submitted your audited accounts? Right? How much is your revenue? Show it to me. How much is your profit? Show it to me. Are you reporting the right data or not? Right? So higher revenue collection over a period of time. Higher tax collection would also lead to improved tax to GDP ratio. And cascading effect would also be addressed, which will add to the performance of exports, which will add to improvement in the competitiveness of manufacturing sector, improve the competitiveness of exporters from the Indian market. All these are the revenue implications of introducing goods and services tax. Done? Any doubts regarding these questions? Let me know. Are there any doubts regarding the questions here? Any doubt in any of the questions? Done. Now let me take up questions from banking. Let's discuss certain questions from banking. Full day we have discussed concepts. Let's discuss questions now. Let's start. Okay. Right. 50% of answer correctly. Why? This is pretty much straightforward of what we have discussed. Money multiplier in an economy increases with which one of the following? Increase in the CRR, increase in the SLR. If RBI increases CRR and SLR, will the money multiplier increase or decrease? I hope you understand this. We have been discussing this. If RBI increases CRR and SLR, money multiplier doesn't increase, money multiplier decreases. Money multiplier decreases. Right? We have discussed all of this right in the afternoon session as well. Increase in the banking habit of the people. Banking habit means what? People are keeping more and more deposits in the banking sector. If people keep more and more deposits in the banking sector, don't you think because of the fractional reserve system in the banking sector, more and more money would be created? More and more debt would be created. And if more and more debt is created, what will happen to M3? Just think of it. What will happen to M3? M3 will be very, very high. M3 divided by M0 would be much, much higher. Right? So right option is option C. Any doubts here? Right option is option C. Whenever CRR, SLR is increased, money multiplier will come down because money supply will come down. It doesn't increase money supply, it decreases money supply. So right option for the question is option C. Population also affects. My dear, you tell me. Between C and D, which is more appropriate? Just think of this very carefully. Between C and D, some of you are saying, sir, what about D? Right? Increased population may also lead to higher money multiplier. That is where you'll have to be very careful. Increased population may or may not have an impact on money multiplier. Let's assume it will have impact. Now you will simply say C is also possible, D is also possible. If you read the UPSC instructions very carefully, which I would say strongly do it, strongly recommend it, please read the instruction. One of the instructions says, in some of the questions, you may feel more than one statement is correct. I am telling you by the way instruction here. UPSC says, in some of the questions, you might feel that more than one statement is correct for the question. But between, let's say, two statements which you feel are correct for the question, choose the one which is most appropriate. I hope now it should be very clear to you. If you feel that more than one statements are correct for the question, choose the statement which is more appropriate. Now tell me, between C and D, which is more likely to lead to having a higher money multiplier? Option C. Even now, anybody has a problem? Option C is the right one for the question. Okay, next. Okay, 43% have answered correctly. Why? It should be more. It should be more. Look at the statement here. In India, the central banks function as the lender of last resort usually refers to which of the following? Lender of last resort. In what context did we discuss lender of last resort? Just think of it. First statement, lending to trade and industry bodies when they fail to borrow from other sources. Here's the important point. I have not discussed it, but that should be very clear to you people now. Do you think that RBI will directly give loan to anybody else, right, in the market? Just think of it. Do you think that RBI directly will give loan to anybody in the market? It could be a company, it could be you, it could be me, it could be Mr. Ratan Tata, or it could be Mr. Adani ji. Do you think any one of us can take a loan directly from RBI? Answer is no. RBI never deals with borrowers directly like this. RBI always deals with banks. RBI deals with another authority called as NABARD. RBI deals with other bigger banks in the market. RBI never deals with borrowers. So is it okay if I say first one is wrong? First one is wrong on the face of it itself. Second, providing liquidity to the banks having temporary crisis. Is it not the feature of RBI or the function of RBI? If a bank is facing crisis, will they not go to RBI, borrow from RBI? MSF. Statement 2 is correct. Lending to government to finance their budgetary deficit. Now tell me, did I say at any point of time RBI now provides for government budget deficits? I hope you understand this. In fact, I've discussed it and I told you earlier we used to do this. Earlier we used to do it. And more on this we'll discuss next week. There is a chapter called as budgeting. Fiscal policy. There is one more chapter we'll cover, budgeting. I'll cover more about it. I'll tell you about FRBM, direct monetization, indirect monetization, which I've covered already. Why did we discontinue it? What were the provisions that were implemented, etc., etc. We'll discuss it. But is it okay if I say this is also wrong? RBI is not called as a bank of last resort because it gives loans to the government. Absolutely no. It is referred as a bank of last resort because banks which are in crisis, banks which require emergency loans can always approach RBI. That's a reason why it is called as a bank of last resort. So right option for the question will be what? Option B, 2 only. Next one. Okay, 51% have answered correctly. Great. Let's start. Consider the following statements. Governor of Reserve Bank of India is appointed by the central government. Did we discuss this? Statement 1 is correct. By the way, statement 1 is correct. Certain provisions in the Constitution of India give the central government the right to issue directions to RBI in public interest. Statement 2 is wrong. In the Constitution of India, there is no provision which directly deals with RBI. There's no provision. In fact, under Schedule 7, when we talk about distribution, I have to understand this. Under Schedule 7, when you talk about distribution of powers between center and state, there is simply a mention of RBI. Right? Why is there a mention of RBI? We said that RBI will come under the central government. That's it. I hope you understand my statement here. There is no provision in the Constitution which says RBI has to have a RBI governor. There is no provision which says 4 deputy governors have to be there in RBI. Absolutely no. The only point of RBI being mentioned in the Constitution of India is under Schedule 7, where we are distributing the powers between center, state and concurrent list like this. We said RBI will come under the center. That's it. So that's the reason second statement is wrong. Can we use elimination? Can we use elimination? Right option is 1 and 3. The governor of RBI draws the power from RBI Act. In fact, yesterday also I mentioned this. The functions of RBI, the investments of RBI, what tools they are supposed to use, how RBI governor is appointed, what are the powers of RBI governor, everything comes from RBI Act of 1934. So the right option for the question is option C. Any doubts here? Any doubts regarding this question? Do let me know. If not, go to the next question. Urban cooperative banks we are yet to discuss. Now solve this. Okay, good. 68% have answered correctly. But what about remaining 32? What is the issue? What seems to be the issue? This is a very, very simple question, by the way. To combat demand side inflation, which of the following activities would be preferred by RBI? Okay. Buy government securities. Simple question to you. In fact, you can use elimination method here itself. If RBI purchases government securities, what will happen to money supply? Think of it. What will happen to money supply? If RBI purchases government securities, can I say that money supply increases? Right? Money supply increases. Now, if the money supply is increasing, will it help in controlling inflation? Is it okay? Will it help in controlling inflation? No, that will add to inflation in the market. So now you know that 1 is wrong. Any problem with this? Now you know that 1 is wrong. Use the elimination method. Use the elimination method. Wrong, wrong, and wrong. What is left out is the right option. Right now, that's the reason I keep on telling the students, practice it. Practice it. It will come with practice. Many of the times, the questions which you feel are very, very difficult, very time consuming, you can get the answer within 10 seconds or 15 seconds like this. Because if this question appears in UPSC, you don't have to read 2, 3, 4, try to think whether which is correct. You already know 1 is wrong. Use the elimination. There you go. You've got the answer within 15 or 20 seconds. So right option is B. But let me address 2, 3 and 4. Increase the repo rate. Is it correct? Of course, yes. If RBI increases the repo rate, the banks will take a loan at a higher rate of interest, increase their lending rate. So money supply automatically will come down, control demand pull inflation. Print more currency. From last 1 week, I've been telling you this. If RBI prints more currency, supplies more currency, money supply increases. If money supply increases, you cannot control inflation. It will add to inflation. 3 is wrong. Decrease SLR. If RBI decreases SLR, it will lead to increased money supply. And if the money supply increases, how can you control inflation? Again, 4 is wrong. Can I go to the next question? Can I go to the next question? Right option for this is option B. Next one. Okay. Arey Baba, why? 1/3 of you have answered correctly. What happened to remaining? It's a much easier question. Which of, in the Indian economic context, which of the following is or are the purpose or the purposes of statutory reserve requirement? What are statutory reserve requirement? CRR and SLR. Any issue? Both of these are referred as statutory reserve requirement. Now, what is the objective? Why does RBI impose CRR and SLR? One, we have discussed this. Can RBI control how much credit can be created using CRR and SLR? Just think of it. Can RBI control how much loans a bank can issue using CRR and SLR? In fact, I've discussed both of them. Statement 1 is correct. Right? To enable the central bank to control the amount of advances. Advances means loans that the banks can create. First statement is correct. Second one, to make the people's deposit with the banks safe and liquid. I told you, if the RBI does not impose the CRR and SLR, banks will simply use all the deposit to lend in the market. That would increase the risk that the bank is taking. So thereby implementing CRR and SLR, is RBI not trying to protect the deposits which are kept by the customers? That is basically the second statement. Third one, to prevent the commercial banks from making excessive profits. Do you think RBI does this? Just think of it. Just think of it. Does RBI have the power to prevent banks from making more profits? Absolutely no. RBI cannot tell the banks don't make more profit. RBI doesn't have that power. Right? If a bank wants to earn more profit, as long as they're following the guidelines, RBI has no problem. So third statement is wrong. To force the banks to have sufficient vault cash to meet the day-to-day requirement. No. What do you mean by vault cash? Absolute amount of cash. Not just assets, cash itself, money itself, not government securities, nothing of that sort, only cash. Right? Is it a requirement of CRR and SLR? No, that is also not a requirement under CRR and SLR. So 1 and 2 are correct. Right option is option B, 1 and 2 only. Next one. Okay. Okay, 42% have answered correctly. Why? Let's solve this. If you have a doubt, please do raise it when I'm discussing the questions. Which of the following measures would result in an increase in the money supply in the economy? Let's start. Purchase of government securities from the public by the central bank. Anybody has a doubt with the first one? Anybody has a doubt with the first one? That is, RBI, right, will purchase the government securities, money supply automatically increases. Right, so first statement is correct. First statement is correct. It will increase the money supply. Deposit of currency in commercial banks by the public. Now some of you feel, okay, if I keep money in the bank, the money supply should increase. Look at my statement. You feel that I will keep my money in the bank and money supply should increase. Does it happen? Right, I hope you understand this. Right, answer. Right, we'll solve questions, then we'll stop the discussion, but follow the discussion carefully. Right, if you say second statement is correct, you believe that you will simply take this 100 rupee, keep it in the bank, money supply changes in the economy. Does it happen? Absolutely no. Wrong. Why? I'll tell you. When you keep money, money supply does not change. The bank will use money to give loan. That is where money supply changes. Is it okay? I'll repeat it again. Be very careful. Deposit of currency in commercial bank by the public. Right? They are not saying loans are issued by the banks. If the statement says loans are issued by the bank, that is basically money creation. That will increase the money supply. But what are they saying? You take your money, put it in the bank, money supply increases. Does the money supply increase? Absolutely no. I'll prove it to you. In fact, one more question on the same statement was asked by UPSC 1 year ago. Let me prove it to you. What is M3? Just go back to the afternoon discussion. What is M3? M3 is basically M1 plus the time deposits. Is it okay? M1 plus time deposits. And what is M1? M1 basically counts the cash held by the public plus the demand deposit plus the time deposit. Is the formula okay now? Cash held by the public, demand deposit plus time deposit. Now let me give you numbers. Understand this carefully. Imagine cash held by you is 1000 rupee. Demand deposits which are there in the bank is 2000. Time deposits is, let's say, 3000. What is the total amount of money in circulation here? What is the total amount of money in the system? 6000 rupees. Now take the second statement, deposit of currency in commercial banks. You will take your 1000 rupee, you will deposit that in the bank. Either fixed deposit or savings bank deposit, don't worry. You will take 1000 rupee and you will put it in the bank. Now what will happen as a result of this? Cash held by the public will become 0. Time deposit will become 3000. Demand deposit will become 3000 and the time deposit will become 3000. What is the money in circulation even now? What is the total amount of money in circulation even now? 6000 rupee. Now is the second statement concept clear to you? Let me know. Right? Why do I say second statement is wrong? It will not increase money supply. Is it clear to you? Now let me ask you a reverse one. In fact, there is a question on this. I'll show it. Right? And that point of time, let's not discuss it again. The statement is like this. You will withdraw 1000 rupee from the bank. Will the money supply change in the economy? Think of it and answer. You will withdraw 1000 rupee from the bank. It could be 1000, it could be 1 lakh, it is 1 crore rupees, whatever it is, don't worry. You will withdraw, right? Let's say 1000 rupee from the bank. Will the money supply in the economy change? Some of you are saying yes. You are wrong. Money supply in the economy will not change. After giving so much of explanation, even now you are worried. Even now you are making a mistake. Right? I'll prove it. My statement is what? You are withdrawing, let's say 1000 rupee from the bank. Will the money supply in the economy change? You are saying yes. It is wrong. Money supply remains unchanged. It will not change. Right? And as expected, how? How, sir? Prove it. My dear, imagine you are here. Let me prove it. It's already there on the board. Imagine you are basically here. Is the color code okay with you? Orange color. You are here. You don't have any cash. But in the bank, let's say 3000 rupee time deposit is there. 3000 rupee demand deposit is there. How much is the total supply of money in the economy? How much is the money in the economy right now? 6000 rupees. Now imagine you withdraw 1000 rupee from the bank. You are moving from this example to this example. You are moving from statement 1 to, let's say, statement 2. Now tell me, you have withdrawn 1000 rupee from the bank. Is the money supply changing in the economy? How much is the money supply even under the second equation? Even under the second equation, money supply remains the same, 6000 rupees. So understand the logic here. The statement doesn't say bank is giving loan. If the statement says bank is giving loan, loan itself is a creation of money. But the statement simply says you keep your money in the bank. Money supply does not change. Money supply remains the same. Is it okay? Second statement is wrong. You can use elimination method. Obviously D and B are wrong here. Third statement, borrowing by the government from the central bank. Right? Borrowing by the central government. If the central government borrows from the central bank, does the money supply change or not? Right? Before you tell me anything else, let's go point by point. If Government of India borrows from the central bank, will the money supply change or not? Answer is yes, by the way. Money supply will change. But now some of you will start reminding me. Some of you will simply say, sir, earlier you told central government is not allowed to borrow from RBI. There is an exception to that. That is where I told you I'll discuss something called as FRBM. Right? There is a rule called as FRBM Act, referred to as FRBM, Fiscal Responsibility Budget Management. During normal times, government is never allowed to borrow directly from RBI. For example, today, can government directly borrow from RBI? Not allowed. But there are certain situations. There are certain situations. For example, there is a war. There is a recession in the economy, etc. In such cases, government is allowed to directly borrow from RBI. Now tell me, if government borrows from RBI, will the money supply increase or not? Is it okay? If government borrows from RBI, will the money supply increase? Answer is yes. Sale of government securities to the public by the central bank, exactly opposite to the first statement. So obviously no. So 1 and 3 are correct. Right option for the question will be option C, 1 and 3. Any difficulty in this, any of the statement, do let me know. Business correspondent, I've not discussed. We will take it up next time. Solve this. Okay, great. 76% have answered correctly. Good. Now again, can you use elimination methodology? Now some of you will say, sir, you have never told us contractionary monetary policy today. My dear, I have not used the term contractionary today, but last week, do you remember it? I was discussing a concept called as expansionary contractionary policies. Right? I'll tell you the context also. You can go later in the sense after 15 minutes you can check it. I discussed the concept of counter-cyclical policies and pro-cyclical policies. And at that point of time, I told you this. Contractionary means reduction. Expansionary means increase. Is it okay? There itself, the name itself is self-indicative. Contractionary means reduction. Expansionary means increase. Now look at the term here. Contractionary monetary policy. What do you mean by contractionary monetary policy? It's a tool, or it's a basically usage of a tool to reduce the money supply in the market. Simple. What kind of a tool will be used to reduce the money supply in the market? Let's start. Start with the third statement, because you can use elimination methodology. Start with the third statement. Decreasing SLR. If RBI reduces SLR, will the money supply come down or go up? Just think of it. If RBI reduces SLR, will the money supply come down or go up? Money supply will go up. Will it be referred as contractionary monetary policy? No, that will be referred to as expansionary monetary policy. So third one is wrong. Use elimination. Wrong, wrong, wrong. What is left out is simply right option B, which is correct. But anyways, if RBI increases repo rate, if RBI increases CRR, don't you think the money supply automatically should come down in the economy? And either ways, you can go through right, wrong, or start with wrong, use elimination, you will get the answer very easily. So right option for the question is option B, 1 and 2 only. Okay, solve this. I will not start, right, right, what is that? I'll not start voting here. You solve it, because it's straightforward. You will get the answer to this. No point in starting, like, let's say the poll here. You can have a look at it, right? So start answering. Okay. If you withdraw 1 lakh rupees, I gave an example of 1,000. Now they are asking you 1 lakh rupees. If you withdraw 1 lakh rupees in cash from your demand deposit account at your bank, the immediate effect on aggregate money supply in the economy will be, can I directly go with option D? Anybody has a difficulty in understanding this? Why option D? Anybody has a problem with this? Right? Because the whole story is already over. Right? What is the broad money? How do we calculate it? When you withdraw, when you deposit, the money remains unchanged, etc. We have discussed this. Right option for the question is option D. It will remain unchanged in the system. Now, next one. Okay. Oh, 24%. 1/4 of you have found the correct answer. It should be more. Let's start. If you have a doubt, let's start. If RBI decides to adopt expansionist monetary policy, expansionist means what? RBI decides to increase money supply. Which of the following RBI will not do? This is very important. I believe at least some of you would have misread this. If RBI wants to increase money supply, which of the following RBI will not do? That is, in simple terms, the question here. First one, cut and optimize SLR. Don't you think that will lead to increased money supply? But question is asking which of the following RBI will not do. So first one RBI will do. It is not the right option. Increase marginal standing facility rate. You tell me. If RBI increases marginal standing facility rate, will the banks take more loan or less loan? Last question. After this we'll stop. Pakka. Promise. After this we'll stop. So my question is simple. If RBI increases marginal standing facility rate, will the banks take more loans or lesser loans? Banks will take lesser loans. Is it going to increase the money supply or decrease the money supply? Decrease the money supply. Is it an expansionary monetary policy? No, it is a contractionary monetary policy. Can I simply say two statement? That is, second statement is the tool that RBI will not use if they want to increase money supply. If RBI will cut the bank rate and repo rate, money supply will increase. That is expansionary policy itself. So second statement is correct as per the question. Right option for the question will be option B, 2 is correct. Is it okay? Right? Someone says, sir, elimination can be used. Of course, yes. Use elimination. That's the reason I keep on telling the students, wherever it is possible, use elimination. You will get the answer much more easily. Okay, now that's it for the day. I'll stop the discussion here. If you have any kind of questions, shoot now. Right, ask it so that I can address, then we will wind up the discussion for the day. Any question? Do let me know. Nobody wants to ask questions. Which edition? What edition? At which book? What are you talking about? I don't know. Please do let me know. What is marginal standing facility rate? Right, afternoon we have discussed this, but anyways. One of the tools that RBI has under the monetary policy is marginal standing facility rate. Under marginal standing facility rate, banks are allowed to borrow for overnight purposes, for emergency overnight purposes. And the rate of interest that is charged by RBI on such lending is called as marginal standing facility. And I've told you this. Because RBI says you have not managed your finances correctly, hence you require finances for overnight purposes, I will charge a higher rate of interest. And I've told you, right, that is why bank rate, marginal standing facility, etc. will be higher than repo rate. Can you please explain M0, M1, M3? Right, M0 is monetary base, currency in circulation, plus other deposits with RBI, plus right, banking deposits with RBI. Now, whenever currency in circulation increases, obviously the money in circulation, total amount of money in the circulation increases. Now, out of the total money in circulation, we will cover a very, very small part of the money in circulation, which has very high liquidity. Because we are covering only small part of the money, because we are covering narrow amount of money, it is referred as narrow money. And right, one more reason why this is called as a narrow money is the liquidity of this money is very, very high. And that's the reason when you talk about M1, you will see the components are cash held by the public, very highly liquid, most liquid. You will see demand deposits in the banking sector, again very highly liquid. M3 is a broader money. Broad means coverage will be very, very high. As usual, the money with low liquidity will be there. Right? That is the time deposit. Along with that, you will also have right, the money with high liquidity, that is M1. That is basically idea of M0, M1 and M3. So how do we learn all of this? Right, argument is very simple. You do not have to become an expert today night itself. I hope you understand. Right, you do not have to become an expert today night. What you need to do is repeat, revision, update, revision, update, revision, update, revision. Simple. Use one static book. One is more than sufficient. Plus current affairs, plus revision, plus previous year questions. That's it. Do this particular, let's say, have this practice for 1 month, 2 months, then you will only tell me, sir, my understanding of economics has improved a lot compared to what it was, let's say, 2 months ago. I do that, you will understand. What is fiat money? Fiat money basically is the money that is issued in the market by the government. When the government will print and issue the currencies, because of the order of the government, the money will have value, hence called as fiat money. Which edition do I read? National newspaper means regionally like Delhi. Again, you don't have to be worried about which edition it is. Read any edition, focus on national news. I hope you understand. Read any edition, but please stick to national news. I'll give you an example. Day for yesterday, right? One state announced a budget. Yesterday, one more state announced a budget. Do you think UPSC will ask you those questions? Do you think UPSC will ask you those questions? Absolutely no. So that's the reason. Again, if your target is UPSC, which edition newspaper you're reading doesn't make any difference. But if your target is UPSC and your plan B is state government exam, right? I hope you understand. Right? So if your target is UPSC and if you say, sir, if not UPSC, tukka lag gaya to, let's say state government, then I would simply say, read the edition of your own state. Okay, done. So let's stop the discussion here today. Let's stop the discussion here today. Tomorrow, not tomorrow, my mistake, not tomorrow, next week. Next week, we'll start from concept of cooperatives. We'll start from the idea of cooperative sector. Then we'll take up small concepts are there. We'll cover, and that will be the end of banking. And pakka next week, Saturday, right, in the next, let's say first 2.5 hours, we'll be done with banking. After that, we'll shift to the idea of fiscal policy, budgeting. Okay, let's stop the discussion here today. Take care. See you next week. Have a great weekend ahead of you, or as well as the weekdays ahead of you. Right, take care. Good night.